New numbers show just how hard it is for many small businesses and minority-owned businesses to get financing. A new LendingTree report shows that even as the overall denial rate holds steady, racial gaps and small business challenges remain pretty stark. The report found that 39% of black-owned businesses were denied a loan or a line of credit last year, the highest denial rate group the highest among any group. It discovered that companies with fewer than 4 employees were turned down at 5 times the rate of large companies or large firms, and that nearly half of all applicants of Small Business Administration loans or lines of credit were denied, more than double of the overall average. Joining us now is Matt Schulz, LendingTree's Chief Consumer Finance Analyst, to break down why lenders are pulling back on what small business owners can do to improve their odds. Welcome to the show, Matt.
Thank you for having me.
All right, these are pretty sobering numbers here that we're looking at here. What stood out to you most about the data from this year?
Well, just the fact that, like you said, we saw almost 4 in 10 black applicants for these loans be denied. It's a really big number, and it creates really significant problems because starting a small business or maintaining a small business is hard enough in today's economy, but if you can't get a hold of the funding, it just puts such a brick wall in front of you that it's hard for you to accomplish anything. So those are really difficult numbers.
Explain to us, if you can, why why these racial disparities are still existent, right? So so much so widespread anyway. Even lending standards are supposed to be objective, right?
Yeah, and you certainly can't discount discrimination and things like that, but one of the reasons I think for this disparity when it comes to black Americans is that we have seen that they tend to have lower personal credit scores, for example, than Hispanic Americans, white Americans, and that is something that goes into oftentimes the application process for these loans. And said many times that there's very little in life that is more expensive than having poor credit, and I think that this is another example of that.
Does the high interest rates, the inflation, or the uncertainty of the job market play a role at all?
Oh, for sure. Yeah, anytime you have an uncertain economy, banks get a little bit risk averse, and they're a little more likely to tighten up the reins and be a little more calculating in who they're going to lend to across the board. So we're certainly seeing some of that here.
We talked about small business loan applications being turned away, double the overall average. Why are these government-backed loans still so difficult to secure?
Well, I think that some of it is just about the unpredictability of the economy and of these businesses, and some of it is also maybe that people aren't necessarily fully understanding what qualifies for these loans. So it's possible that they could be asking for a loan that's too big. It's possible that they may actually be a big business instead of a small business and not qualified that way. Again, it's possible that they may not meet the credit standards that are needed. So there can be any number of reasons.
What's the message you want to send to small and minority-owned businesses as a takeaway for this? Is there a reason for hope amid these challenges?
Oh, there's always reason for hope, and the best thing you can do is get your business and your personal credit in line, have a thoughtful business plan, and also make sure that you understand the resources that are out there for you, because small business loans aren't the only option. There's plenty of resources out there, whether it's funding, marketing, networking, training, on down the line, that can help businesses in your area. So it's important to remember those.
All right, Matt Schulz, thanks so much for joining us, and thanks for the insight today.